James, Lloyd, and Voytek Mardula from USProperties.ca.
Hello.
I'm really excited to share what they have to offer, and we're actually clients, so we're going to have our first house with them very shortly, and we're starting to invest in the US thanks to you guys, so we're going to drink to that.
Yes, cheers. So tonight we're actually drinking an Amaron della
Valpolicella from Italy.
Yes.
Do you want to show the bottle?
Oh, sorry. I'm looking at it, but not showing it. So this is a 2015, and it's
a gift.
It's a gift. So it's an exciting gift because it's actually from somebody that François's been mentoring, and he bought his first duplex.
Yeah, last week. So I got to visit the duplex, and it kind of looked like a US property. Everything was ripped out and being fixed. So.
Yes. And actually,
Detroit special, as we call it, right?
Mm-hmm.
Yes. And 2015 is actually a special year for Amalan that we just learned. It was like an exceptional year. So this is really, really good wine. And we didn't even know. We just opened it. We're like, oh, this was really good wine. We should have maybe waited.
But we're having it with you guys, so it's fun.
So tell everybody, for the people that are listening who don't know, who is James and Voytek and US Properties?
Why are you here?
Yes.
Well, good evening, everyone. It's a pleasure, first and foremost. I'm James Lloyd. I'm the Canadian sales manager at USProperties.ca. So, we're a boutique investment real estate company based out of Toronto, but our whole infrastructure is in Detroit, Michigan. And we really specialize in helping Canadians every step of the way with a turnkey solution for investing in cash flowing real estate down in Detroit. So my role in the company is to be the liaison for the customers to go through our turnkey process, everything from acquisition to from introduction to acquisition, through the purchase days through closing, right? So that's what I do on a daily basis all day. Whereas Voytek, who I'll introduce right now, is the company president, and he's more involved with the construction and the acquisition of the properties.
That's fantastic. Yeah, thanks very much, James. Yeah, I pretty much go skiing while James does all the work. So
that's how it's done.
Some truth to this, you know that, right?
Yeah. Oh yeah. You were in Tremblant not too long ago, and
that's right. Incredible skiing over there. It's been really beautiful. I wanted to thank you for having us on the show. We've been operating in the US for the last 5 years. I was actually introduced to the market by a good friend, and it was very eye-opening. Detroit is a city that has gone through a lot of change and went through bankruptcy. And we've been doing acquisitions there, mostly single-family homes. And I primarily handle, as James mentioned, acquisition, sourcing of the properties, identifying, scope of work, and hiring contractors to perform different functions, and finally delivering a product to our customers that's finished, that's ready, for rentals or whatever they choose to do with it. They may want to resell it or, rent it most of the time. And I also, own the property management company down there that handles all the rentals, on a daily basis.
Yeah, that's exciting. Mm-hmm.
Yes, it's a turnkey service or product, I guess, that you offer, which was very appealing to us. So we can go skiing like Voytek and invest. So it just sounds perfect to me.
No, it is, because I can tell you, the more that we reach out through this virtual network across the country, the more I'm being made aware that there's a lot of Canadian real estate investors who are interested in the U.S. market, but find it a bit daunting and overwhelming. Like, where do I start, right? Like, how do I source these properties? How do I know the neighborhoods? Who's going to manage it? Who's going to renovate it? How am I going to set it up structurally to do it correctly? And, we have a real niche being, Canadians ourselves, really with a turnkey solution for Canadians on how to do this and be your eyes, ears, and boots on the ground and have all of that laid out for you and make it as a pretty seamless, I must say, at this point in our development, being 5 years in. Our turnkey systems are well-oiled and going very well. And, it's amazing to reach, to reach out and connect with all these Canadian investors, because they're really coming in droves, saying, this is something I've always wanted to do, but I've always kind of been overwhelmed, not knowing where to start. How do I trust which neighborhood is good and which isn't? And credit to Voytek and Pamela, they really have produced a really good turnkey system here.
Yeah, no,
it's great, because we were thinking about it, like you said, for a while, and I'm like, François, you're crazy. We don't know the states, we don't know the markets. Who's going to manage it, like you said? So
and with COVID too, you can go, but I mean, it's it's not tempting unless you could swim across. Then maybe I would go, but otherwise I'm not going there.
Don't they shoot people that do that?
Maybe there you go. Then I don't have to worry about anything.
Possible.
Exactly. But I love that part that you've been there. And then Detroit, Jennifer, the only memory she has is a bus ride in her early teens. The guy said, just don't get off the bus. You can, but don't.
Yeah, he didn't recommend getting off the bus in Detroit. So that's changing.
But now I've seen pictures and I've spoken to some of your references, and it's incredible the change. So
that's how I was too. You know, I mean, when Voytek first told me 4 or 5 years ago about Detroit and you know, started as an investor there. And then when he was starting to tell me about starting this company, I was like, are you sure? I mean, like, it's Detroit, right? And I must say, on the first time I went down with Voytek and Pamela, I was completely blown away by what I saw. You know, I saw a downtown core, be it a few years after the Renaissance started, that was completely transitioned. Look a lot like Toronto or Ottawa. Yeah. Downtown, you know, pre-COVID, it was busy with the restaurants, and I saw new sports arenas and, you know, busy summer events and transportation. And we went into these neighborhoods where we purchase, and it was, you know, residential mixture of colonials and bungalows that were well maintained. There were still a few that needed renovation, and those are the ones that we pick up. But I must say, like, a lot of that older stereotype of how Detroit was or what you people envisioned is not representative of what's going on down there today.
No, but it reminds me, I know to a lot of Canadians, we used to live in Hamilton, and late 1990s, early 2000. It never got as bad as Detroit, but it was scary. I remember when I first came to Hamilton, I'm like, is this Canada? It looks like the United States. I'm sorry to our American friends, but it really looked like the United States. I'm like, whoa, you don't get out of your car. Yeah. And that's how like downtown Hamilton to me looked coming from Ottawa. Ottawa is much it's now Hamilton has really gentrified and cleaned up, and we lived in a place like it was just.
Well, when we were first there, we were downtown Hamilton, and we actually had to use what nobody sees anymore, which is a payphone.
Yeah,
it was full of puke. So François was like holding it.
And I had to use it. I had no choice but to use it. And then the first apartment. Anyway, I'm from a small town. I was very sheltered. There were some mice in it, so the bread was walking on the countertop. Like, I can't take this place anymore.
So anyway, just to say that it kind of made us to try to think of Hamilton like that.
Yeah, and Hamilton has come such a long way.
And it's beautiful now, Hamilton. Yeah.
Like if you lived there, you could get places for next to nothing, and now it's almost Toronto prices. It's gone up a lot. So Detroit, again, I'm sure like there's quite a ways to go, but the opportunity is there to buy now with a solid team. So what are you guys drinking?
Yes, what are you drinking tonight?
Yeah, cheers, guys. Cheers.
Cheers.
I think
my story is interesting in that, you know, my actual first career, my background was in high-end restaurant management and wine. I was professionally trained down in New York City and actually took my sommelier training with the American Sommelier Society in New York and did it for close to 15 years. About 5 years ago, I went through some lifestyle changes, and actually, you know, as much as I actually still have a passion for talking about wine, it's just better for me in my life if I don't partake anymore in it.
Oh, okay. Sorry.
Voytek does, and I don't, but I'll talk about it with you. And it's absolutely a pleasure to be with you guys tonight. So I'm just having a Perrier.
Fancy water or something, because that's something else. There's like bars where you taste water, and I don't know if you can taste the difference, but anyway. I would go to a place like that, definitely.
Probably, that's right. Probably your first sober sommelier, right? So
No, I didn't like wine till I turned 35, and then I started enjoying it, and I'm like, now I love it. And
no, for sure, it's delicious. Voytek, what are you drinking tonight?
I prefer white wines. I have you know, especially French Chardonnays. So I have like especially Chablis region. I have a Joseph Drouin Chablis actually that I picked up in Tremblant. So it's really nice, very drinkable. You know, nice light flavor. It's like typical French Chardonnay. You know, it's
goes with everything.
Goes with everything. Yeah. Food or not food. It's you know. It's good.
Yeah.
Oh, that's cool.
Yeah, absolutely.
I was discover what people like to drink, and Or water, that's good too, with some nice lemon in it.
Definitely.
Mine is delicious for sure. Don't get me wrong, and I enjoy it. So let's have a discussion about it tonight. No problem.
Yes.
Yes, absolutely. I think that's interesting that you were a sommelier.
Yeah. So like I went down when I was 23. I graduated from Dalhousie University and was, I really believed at the time I wanted to be a restaurateur. So, I had a girlfriend who was in fashion. So I got the opportunity to move to New York.
Wow.
Chef training in restaurant management. At that time, I took the opportunity it was ironically just before 9/11, was to take my sommelier training at Windows on the World, which is at the top of the World Trade Center. But I did it. And, luckily, I was not involved in that, but I spent some time in New York and Toronto with front of the house, and it kind of really led into what I'm doing today professionally. I've always had a passion for customer service and being around the customer, listening to their needs, and always being that person who is the face or the front of the company with the customers, right? And whether it's being the restaurant industry or retail or in sales or working with my lifelong friend Voytek in this blessed company. I really, really have a passion for dealing with customers and giving great customer service.
Wow, that's awesome.
Yeah.
So the big question for us tonight that I think a lot of people are wondering, why did you pick Detroit in the States? What was kind of the thoughts behind that? Yeah.
Like we got a bit of a peek. Voytek was introduced by a friend, but still, I'm sure you had some questions like, wow, this is scary, a bankrupt city. And I didn't even think that was possible.
I'll tell you, I initially went there just purely for the numbers, because my good friend came spend New Year's with us, and I was investing in the Canadian marketplace. Not too much. It was very, I was running another business, but I was doing real estate on the side.
Yep.
And, I had a condo and another multi, and we had we had a bunch of tenants, so we were just self-managing, So, but I wasn't thinking about doing it as a career. And then my friend spent New Year's with us, and he came and said that, in Detroit, you can get 12 to 14% cap rates, right?
Wow.
So, so that was enough for me to say, okay, like, when do we go, right? So, and my expectations were low. I mean, just as you mentioned, Hamilton 20 years ago, and I was driving down to Detroit, I was thinking, had this like Audi at the time, and I'm thinking like, am I coming back in this Audi? Like, is it like, am I
probably?
This is going through your head, right? And I really, and when I heard 14% cap rates, cap rates tend to go up as the quality of the neighborhood goes down, right? That's usually the trend, right? And so I was really expecting to drive into neighborhoods that, you would just drive by and we would say, okay, well, I'll take that house and then just keep going, and send me a photo of the inside, but really when, we ended up in neighborhoods that look like really nice residential areas in Detroit in Toronto. And so, we were walking around these neighborhoods and I thought, wow, these homes in Toronto would cost $2 million, literally. And, and it really costs, close to $1 million to construct them in Toronto, and so, we started looking at the prices and we thought, these prices are so incredibly low, and these are very solid brick homes built in 1930s that, the construction back then was, far superior to today, especially materials. It was the real brick, and, so there's very few structural issues there, like it was really well built homes. And I thought, they're not going to go down in price. And even if they do, I'm still going to get my $1,000 or $1,200 a month from it, even if it's supposed to fluctuate down a little bit.
Yeah.
And so, and that's how really I began in cash flow investing, because as soon as I got home, I just started trying to figure out, well, how many of these houses can I get? Because so we started calculating everything in houses. My wife, because we came there initially just as investors, just like you guys are looking at it for the first time. We were thinking, well, we're just going to buy a number of these homes, and hopefully, we'll have enough that we can replace both of our incomes, and we can just really live off the residual income, and that was really, so we really are very much experience-based investors in the marketplace. And so all the advice that we give you, we went through it. We went into the good neighborhoods. We were, fortunately, my friend was smart enough that he started in good neighborhoods. And he wasn't greedy. Like, he wasn't trying to go for the smallest, cheapest house in the worst neighborhood, because some people take that strategy. Fortunately, those people don't have as much success. They can still have some success, but it's not the same level.
Harder.
When you go for the better properties, for the better neighborhoods, I mean, we've seen certain neighborhoods. I mean, look, Detroit did 27% in the last 12 months. Okay.
Oh my.
If you take
like almost Ottawa numbers, that's 30 here. So wow.
Crazy, right? Crazy. And in the last 3 months alone, it's been almost 16%. So it's accelerating, right? And we've been seeing appraisals there in the better neighborhoods that are just eye-opening. We're just like, wow, I can't believe that, even pre-COVID, prices they were good, they were going up, but now there's been this massive explosion in pricing, and we're really seeing that trend accelerate. But what I like the most about Detroit is the leadership and the mayor that's very business friendly, that's able to attract these massive, very powerful billionaires that are rebuilding the city. And they're not only building the city, just renovating it and selling it to whoever. They're actually building infrastructure behind it and creating jobs and marketing for real jobs, creating real employment. So there's actual money there to be spent. And so it's not a temporary thing. Like, this is a very serious project that's happening there to bring back Detroit to its former glory, and which it back in the 60s, it was an iconic city, 60s, 70s, that was on par with Chicago and with New York. Like, those were the
beautiful architecture there. It's really
incredible. I mean, you see the skyscrapers, like the beautiful buildings downtown. I mean, it looks like, Gotham City, and it looks like
it does.
It really does. It really does. It's incredible. It looks like a very small version of New York, actually, like parts of it, and so I really fell in love with the architecture myself, and I said that these beautiful colonial homes, and then, behind it, there's this very powerful machine, which, the factories, the car factories, the manufacturers, which are now being retooled into selling trucks or SUVs, and most importantly, electric vehicles, which is probably one of the biggest trends in automotive going on right now, along with autonomous or self-driving cars. It's just massive. And if you look at, the stock market or anything that's going on in any of the vehicle factories and manufacturers out of China or out of US, it's everybody's putting money into electric. Tesla stock's gone through the roof. I mean, it's absolutely crazy. And anything that's electric vehicles right now is being touched. And Detroit has the perfect infrastructure to manufacture, a huge portion of those cars globally. And we think, we're already seeing this drive the pricing, the employment, everything. And ultimately, and not lastly, but I think what's really important with any city is young people, right? You need to have people in their 20s, the city to be appealing enough that people, when they finish school, finish university, continue to move there and drive the population, because that's really the future of the city. That's the life of the city. And, and certain cities right now, like New York, are experiencing an exodus, right? Whereas cities like Detroit was the second city when it comes to millennial migration, last year.
But it's affordable.
Well, that's right, Francois. I mean, it's kind of like one place where the paycheck goes the furthest, right? So we get like Voytek has been saying, there's this new influx of companies coming in there, like the tech sector, like Google and Microsoft and Snapchat. They have got big offices, in Michigan, down in Detroit, and those, you bring those employees in there, and I tell you, for $100,000 salary, you can live like a king in Detroit, right?
Oh yeah, well, that's we're in Hamilton in the late 1990s, early 2000s.
Sure, just also just echoing what he said, like with these billionaires that have come in and brought their companies, like Dan Gilbert, and brought their Quicken Loans and Rocket Mortgage and all the umbrella companies in there. They've also, to their credit, done what Voytek has just said, and put a lot of money into these programs, right? Like to help with the infrastructure, the schools, the blight elimination, the retraining of the employees to work in these new jobs in the plants. And it's really, like Voytek said, a real like restoration project to bring Detroit. And it's a movement that really hasn't been seen like since like the Great Depression, right? We're talking about absolute collapse, true renaissance, right? And it's really exciting for us to be there. And it just breeds this environment where we're getting these undervalued homes, that have proportionately high returns and great appreciation, right?
That's awesome. It really does make it a great place to invest, like you guys said.
Yeah,
that's good.
And the gentrification, one of our business partners that you guys know, he said, "Is there a Whole Foods store?" And we took a look.
Sure there is.
Yes, okay. Want to be this close to Whole Foods. So
I was in Baltimore a couple of years ago, and if they have it in Baltimore, they have it in Detroit. Trust me.
That's it.
Wow.
And
it's actually 5 minutes away from the property that you're purchasing. Because I've stayed in the area where you're getting your property, and we go to Whole Foods to pick up food for the for the evening or for the week when we're there. So there's the gentrification is happening so quickly, and and the rents are going up so fast near downtown that that a lot of people are there's some people being driven out into the suburbs, but that's good. That's expanding the suburbs further and making that area grow, and downtown. I mean, it's just incredible. Like there's 10 boutique hotels that have opened in the last year and a half, right? So I mean, it's unbelievable, what's happening there. There's all kinds of restaurants opening. There's festivals. I mean, you go there in the summer now that vaccination is happening and people are really traveling a lot more. We're seeing so many people coming into the city, and it's incredible what's happening. How many new places are opening? How many stores? How many big companies are moving into the city to support that growth? So it's really exciting. It feels like just a fresh start for a city. But we've noticed during COVID that like how strong the backbone really is, because everything is owned by these large businesses and billionaires. They're not going to start selling off and exiting because something came along. They're not going to change their plans.
Long-term vision.
It's long-term vision. The mayor there went and said that, we're in the third inning, and of development. So that initial high risk is really gone and past, but you still have the opportunity over the next 10 or 15 years to jump on board and really ride the coattails and, and just watch the properties appreciate. I mean, it's really incredible what happens there.
That's awesome. So what kind of made you go from, like, you were investing yourself in Detroit,
yes,
kind of going to the jump and getting other people on board with you, and then having James come on board and all that? So what kind of made you go that direction?
Before he answers that question, I'm going to say I've known Voytek for 35 years. Okay, since we were children. He's been a business owner since the grade 6. Okay, so
Lemonade.
I've never met a more canny entrepreneurial mastermind than my lifelong friend, Mr. Mardula. So I think he saw a void and a real opportunity to do exactly what we're doing. And I must say, if I was to say that I thought that he probably thought we would be where we're at now, I would say that he probably did, because he told me when he started to go to Detroit, he said, "James, I'm going to own 100 of these things," and I don't think he's far off, right? So.
Grade 6, yeah. When you used to run our chain of lemonade stand that we had.
That's right. That's what I was saying.
James was director.
Crush the competition.
Yes.
No, but it's smart. I mean, it's a good model if if you know the money is there and it's stable, and you have the whole Section 8 housing, which is really, I think, what sold us on it, because it's like, how do we find tenants? And it's scary. So there you have almost guaranteed tenants, and then the rent, I mean, is from the government, and the program is quite interesting. So
I mean, I'll let Voytek talk about that, but really that is to credit to the systems he's put in place, right? And absolutely, Voytek. So I mean, the Section 8 has been a big part of us maintaining the ability to deliver returns during these times, right?
Yeah, it's been a real blessing, because I think that some of the traditional larger portfolio holders in the US, some of the REITs and stuff like that, they struggled a little bit, and the value of the shares have gone down and stuff like that, because people were concerned that that the rent aren't going to be paid, You know, but in reality, actually, because of the tremendous amount of support that was provided by the U.S. government, you know, even back in April and May, you know, 90% people were paying their rent, you know, on time, according to different software providers. So actually, you know, that this time was, you know, it's funny because obviously some people were making less money, but definitely 100% of the people were spending less money, in a sense that, you know, they were home, they were, you know, they've actually paid down their credit cards, they improved their credit. Like, this really happened, you know, it's crazy. Like, the credit scores have gone up in the US in the last 6-7 months, you know. So it was a strange concern, and people just spent less money on frivolous things, you know, from what we've observed. But
no commuting, no gas. Like, I noticed our gas bill for the cars sitting in the driveway. I'm like, oh, we fill up every 2 weeks. It's crazy.
Restaurant, maybe like go for dinner, right? We're traveling.
You know, no multiple trips and stuff. So, but, you know, but I think that, you know, the trends that are happening right now are really interesting. I mean, there's a movement towards sort of, you know, universal income and kind of providing global wages, and there's a lot more in support available, and you know, and housing is part of that. And I think people's homes have become even more valuable than before. I think there's more nesting. There's this instinct to kind of even, you know, isolate yourself further, as, you know, there was weird subsequent waves of COVID and all that. And, you know, and so people have invested more into their homes, and so many more people are working out of home that I think that, you know, that trend is just going to continue, and that people are going to invest more in their homes, and they're going to be more valuable. And we've seen these huge trends. I mean, our Home Depots and Lowe's would get cleared out of supplies because people were taking their government support checks and renovated their homes. You know, it's like, this is what's going on, you know, and we've noticed this. So I think that, you know, being in a single family home game long term right now is a really good move. You know, like, it's very stable. It doesn't cost a lot of money to get into it, and, you know, when you can get that income every single month, and, you know, and with the appreciation happening, you can refinance these properties, pull out some, you know, additional equity, and keep growing your portfolio. And that's what really we're teaching our clients to do. You know, we were fortunate enough, Pamela and I, to have experienced this in the last few years. And, you know, we're continuing to buy in the marketplace. We're buying, you know, we just bought a property a few months ago, actually in your neighborhood. So we're neighbors. So, you know, you know, and we've renovated it. And cheers, guys, cheers. We'll have to have a barbecue in the summer, you know, have some.
So that's great.
Did you want to kind of run through like a deal so that people kind of understand? So I don't know if people who are watching know that what you do exactly, like US Properties, you buy the property, you renovate it to.
Sure. I mean, Voytek acquires the property. So look, we're very selective of the neighborhoods that we purchase in. This is Detroit, Michigan, and, you know, part of the Voytek's experience and our experience now over the 5 years is knowing where to purchase. Right. Yeah. We'll scour, or what should I say? We'll look through available properties from our off-market suppliers, be it some funds or private portfolio suppliers that Voytek's made relationships with. Right. And we'll look for like ones in the areas that we know are good. We'll evaluate a home. We'll send our contractors through the home and take a look at it. We have to be very particular in knowing, like, what's it going to cost for this property to be brought to a state that's going to obtain maximum market rent for our clients, right? If the numbers match that, you know, we're going to be able to present it, you know, at a price that's going to deliver the returns for the clients, and to be in a state that it's going to be, you know, for maximum market rent and appraise well, and Voytek will acquire it, right? You know, at which point, you know, I put them on pro formas and would present them to potential clients as, you know, available properties in our inventory, like I did with yourselves. And if it's selected, we would put it under contract together, which is kind of an intent to purchase. It's a purchase agreement. There'll be some conditions in there to protect the investors and us, that the title is going to be free and clear, and that we're going to close in 6 weeks through Fidelity National Title. And then, you know, Voytek would start the construction, right, on the renovations, and it takes, you know, whatever said time will be going back and forth with the client, and I would help you or the clients get set up with the lawyer during that time, right? And we'd all be working towards that closing date, and that's really what we do. You know, we pick up the properties that we know are good, that are going to present well to our clients, that if, you know, that Voytek would have in his own portfolio, and you know, we find them for investors who are looking for these homes in these neighborhoods for these returns, and then I help them through the entire acquisition process.
Yeah, it's been excellent so far. I mean, you've introduced us to a lawyer.
Yeah,
the whole procedure. So we have
it's a big part of it, right? I mean, we had to get that part in place. I mean, as Canadians, when you want to own these properties correctly for taxation and liability, right? If you do it incorrectly, there could be some potential problems with taxation. If you do it correctly, essentially there won't be, right? So we have a structure in place that that Pamela and Voytek worked with a cross-border tax specialist, and we've used it hundreds of times and it works. And we have a lawyer who's a big part of our team to help the clients get set up correctly. And it's not a very arduous process. And lastly, I'll say on this topic is that, I deal with a lot of things on a daily basis with our client base, and nobody's emailing me with tax issues or structural issues. So that part's taken care of, right? And that's what I do on a daily basis, is just help our clients through this whole entire turnkey process and just coordinate everything with Voytek, timing wise, to help you get your property as quickly as possible.
Yeah, well, and I think that the key is, like you said, it's turnkey. Like, I think that we've kind of found it's almost dummy proof. Like we just sit here and, okay, what's the next step? Okay, what's the next step? And we just kind of go through the motions.
So
but it's not like the usual investing that we're used to, where we're kind of boots on the ground ourselves and kind of scrummaging through the
It's all there for you, right? And often clients will say to me, like, okay, what are the next steps? Like, do I have to get set up with the lawyer? What about the timing and stuff like that? I say, guys, we got you covered. Okay, let's just start with selecting a property, and I'm just going to guide you step by step. And there's not that many of them, to tell you the truth, through property ownership, right? And I have absolute confidence in the properties that I have being presented in a way that are accurate. We take a lot of time and care in presenting the figures correctly and ARVs correctly. And we have a great team in place, a Detroit-based team. Our property management is really expanded, I think, the right way recently to be able to handle the continued volume and growth of our company. And there's some serious Detroit professionals in there who have a lot of passion, who are very accurate in the projection of rents and ARVs, and are also going to be there to help expand our company from the property management perspective to handle the increased volume of our portfolio. And I'm very, very pleased, I must say, in the last, I would say, was the last 2 months, Voytek, this new change in our property management. I think it's really working well.
Yeah. We keep expanding our property management. We really opened it specifically to help our clients, and people that really buy properties from us. And, I find it's a lot of work, and but we do it for our clients specifically. I was speaking to a gentleman yesterday, and they live in Caledonia, actually, which is, in between New Zealand and Australia, right? And really nice people, and they have investors there. It's actually a French island, and anyways, they were asking us, oh, we have 20 properties, will you take them? And I said, I like you guys, but no, if you want us to, if you have some clients who want to buy ready properties that we have selected in our neighborhoods, so we know we're not going to have headaches, that we've done all the work to the property, we've had it inspected, we've done every single repair, like making sure, look, it's maintenance, it's still going to pop up here and there, but we need all the major stuff. You're not going to have roof leaks because we put on a new roof, or or window issues because all the windows have been replaced, and that kind of stuff. So we don't say yes to other properties. We just really focus on our clients and making sure that everybody has a good experience, and that we continue to service you, because ultimately you want to make money on your property, and property management is the X factor. I always say that it's fine. If you have bad property managers, and they could literally suck all the cash flow from your property, and you're not going to see a profit. You're just not. And this happens in markets all over the world, and because we're trying to really, have you build a big portfolio, we want you to succeed and to make money on a monthly basis. So ultimately we can keep working together, and, and you can build a huge portfolio, because financing will allow for that in the US, because the financing system is very different in the US. And if you want to buy 100 properties, you can.
I know, it's crazy. It's unlimited.
Yeah, it's completely unlimited. And that's what really got me so excited, because, you know, I was thinking big, and I didn't want to just go there and have one or two. I was thinking, what happens if you get 100, right?
You sound like this guy.
I was just going to say, I see a lot of Francois' eyes lighting up right now. Right?
100.
I know how this guy thinks. You have to keep him in line, right?
It's $1,000 a month per property, and it's $100,000 per, you know, times 100 doors. You're getting $100,000 in income every month in US dollars, you know, minus some expenses, but you know, it's amazing money, right? And it really is not, it's something that you can build in a few years, really. Like that's what's really powerful about it. It's not a lifetime goal. It's like a 5-year goal. And then if you want to go to 1,000, you can, because the resources are there. You know, I mean, most people can wrap their heads around having 1,000 houses, but if you can have one, you can have 1,000. It doesn't really matter. It's just a house, right? And somebody lives in it, and they give you money every month. You know, it's a good deal.
Economies of scale. I see myself with my chopper and then looking at my houses too.
Stop it.
First of all, we're going to take the helicopter down to Detroit, right?
I do. That's my next thing. I want a helicopter for sure.
So maybe just to explain it to people who are listening who maybe don't kind of get that. So in the States, it's asset-based lending, as opposed to here, you kind of have to qualify for the credit and everything.
Yeah, it's the craziest lending system in Canada. I mean, it's like, you know, oh, you're making lots of money and you have a job, so you can borrow more for a house, which has nothing to do with your job.
Nope.
And, you know, like, and you're not going to use the money from your job to pay the mortgage, but you're going to use the money that the tenant's giving you to pay the mortgage, right? So it just, that system, it makes no sense to me.
No.
It always frustrated me when I lived in Canada. And, you know, and even, you know, what's worse is that eventually they just make you stop, right? Like eventually, like you just get to a point and all the banks say, well, no more. It's like, well, how do you get to decide when I get to stop?
Yeah.
You know, seriously, like, why is it your decision, right? Whereas in the US, what's really interesting is that, like, lenders, they're calling me all the time. They say, hey, what do you got? You want to borrow some money? You know, I'm not even joking. They do. We have so many people calling us and offering us financing. And as long as you're able to come up with the down payment, you know, you can borrow as much, and as long as, you know, you have a tenant in place and you can show that you have a lease, which we can do through property management, well, you can borrow as many as you want, you know, and you know, I have some friends that have built 700-800 unit portfolios in less than 10 years.
Wow.
You know, I mean, and it really, I don't know anybody who's done that in Canada ever. No. You know, unless it was like generational wealth and was handed down, you know, dozens and dozens of years. So I really think, I think it's an exciting market. You know, I don't plan on buying, you know, more stuff in Canada unless it's for like personal usage, you know, and I just think that, you know, it's less stressful in many ways. And, you know, and it has all the benefits that you get in Canada, except you get that cash flow, which you can't get here, you know, and it's just, it's easier and it's easier to grow. And I think it's more lucrative ultimately.
Yeah.
Wow. You need to buy a place in Mont-Tremblant.
Yeah.
He's got you beat there already.
Yeah.
We do have one there. It's a nice place on the hill, so we go skiing there. But that's for personal usage, you know. And I just love skiing, so we spend a little bit of time there. But you know, I'll tell you, it's the only place that doesn't make us money. Like and we try because we rent it when we're not there, and like every month it's like, oh, like it's going to make the mortgage, not going to make the mortgage. Like that's really what happened. And it's just. We were laughing with my wife because we said, this is the only place that causes us stress. It's the only place that we own in Canada, you know?
Really?
So,
wow.
Yeah. So, I mean,
it's been good for you recently, right?
What's that?
It's been good the last few months.
Well, it's been good because we've been able to hide out there, you know, because the chairlifts are working and stuff. And, you know, so we've been able to ski and there's no one there, which is really crazy, you know?
Yeah.
So it's been really nice, but most of the time we try and rent it a little bit here and there, and and it's always a battle because just the expenses of the mortgage, of the condo fees, the taxes and everything, it's so expensive. In the US, I have the same expenses for a whole year, for that I do for 1 month over there.
Wow.
Yeah, no, seriously.
Well, that's the thing, about Detroit is that the expenses are low. With these homes that we're selling, it really does. Obviously the price of acquisition is a fraction of what it is in Canada, right? But also it's the environment of the expenses, like property taxes and maintenance. Everything is low. It's a recipe for cash flow, right? And I can tell you from just working in it day in, day out that the numbers don't lie. It's really attractive and quite a lucrative investment, especially for the cost of acquisition.
Yeah, absolutely. That's what we thought as well.
Yeah.
Something I'd like to ask as well is, why do you do a single family homes as opposed to multifamily? Because I think that there's a lot of investors that are kind of stuck with the multifamily.
I'll quickly jump in on that. Is that we're in predominantly the single family market. It's got really to do with the class of neighborhood. I'll give a few points. Okay, so these single family homes that we're talking about in these B class neighborhoods where we usually purchase in these 5 or 6, maybe a few more neighborhoods that surround the city of Detroit and in the North End where you guys are, it's predominantly single families like colonials and bungalows, right? The multis, the smaller multis like the duplexes and the 4s and the 6s are a little bit further out. So it's a bit of a step down in quality, right? Where in some markets that may not be an issue, but it's not necessarily a great thing in Detroit.
Yeah.
And moreover, there was a time where we had a lot of orders for duplexes and fourplexes, and I was into it quite a bit last year. Because I thought, hey, these look like good deals. They're more expensive, and the cash flow looks good for the clients. Let's go this route. And what ended up happening is we got into more and more into property management. I noticed that the issues that were coming about were all coming from the multis, right? Was that the tenants were a little bit more transient. There was more issues with obviously the incurring of utilities and water and stuff because it's split lines. Whereas, these single family homes that we renovate and take our time with the repairs, et cetera, we put a Section 8 tenant in there. And for the most part, it's quite quiet. It's just cash flow. The families are in there. People are doing, what they do. And we've done the repairs, in a manner that not a lot comes up. Whereas with the multis, it's been more of a headache with the management side of it. I think Voytek would agree with me, right?
Yeah, it's a pain in the butt,
Yeah.
It looks great on paper, and the returns are nice and everything. The problem is there's a lot of kind of hidden expenses that come up.
That's what I was trying to get at. Yeah.
They don't happen at every single one of them, but they happen sporadically. So it's even difficult to plan those expenses.
Yeah.
And I find like mostly it's around the tenanting, because there seems to be that, it's very difficult to find 2 tenants at once. And often there's one tenant and then one moves in later, and then that person's moving out and you're turning that one and then you're putting in another tenant. Like they don't seem to, I have never had a duplex where both upstairs and downstairs tenants stuck around for like 5 years or more ever, and they weren't, and so whereas in homes, we've had tenants for extended periods of time and we've had tenants that have been in the house for 5 years. Right. So, and they tend to stand for another 5 or for another 10, and that's really what you want in markets like Detroit, is you want the long-term tenants, because you can increase rents while they're in there with especially with the government, but you don't have to deal with the turns and, with the turnover and with new people coming in and tenants not getting along. It's just, it really ends up being a lot of headaches, and usually one side on average tends to be vacant. In an average life of a duplex, and then the expenses end up eating into the income of the one side a lot. So your net is quite low. You're still going to make like 5-6%, which like in Canada, that's still pretty good on one side of a duplex, but you're not making that 12 or 13 or 14% that you should be making, if both sides were occupied. So, and fourplexes, forget about it. Like, it's like, that's a disaster,
people are going to do a single family duplex conversion, right? Well, in Detroit, we do it the other way. Right. Yeah. We take the duplexes and we actually convert them into a single family home. And if you do that, the value goes up like 25 to 30% of the home. It's crazy, especially in the good neighborhoods.
Yeah.
And the appreciation factor, which is obviously a big part of what we're doing here in these key high appreciation hot zones where we buy, is in the single families, right? You could be getting this 15% appreciation where you'd be lucky to get like 3 to 5%, if not flat, in the multis.
Okay, wow. So it's quite different than in Canada, because I think a lot of people are doing the opposite.
That's what I was just saying. It's ironic, but we're doing the opposite in Detroit.
Yeah, well, I mean, because of the cost of housing is so high. I mean, in Toronto, you have to share. Like, even if you have a big fancy house, you're going to have a basement apartment to help pay the mortgage.
Yeah.
Well, out there, people have the luxury of space, so they get
land. These lots are huge that the home is built on, and and ultimately, if you can rent a house for $900, like, do you really want to go into a half a side of a duplex for $7? No. It's like you have your own yard. You don't have to deal with a neighbor. You have way more space. You usually have additional bedrooms. So for $150, most people are going to go in that direction. That's why there are way more single family homes, and that's why we really like that market. And as James said, they just appreciate so much faster. So.
And then the building stock out there as well. So the built environment is mostly single family homes. From what
it is in the neighborhoods where we are anyway. Where you want to be. Yes, right. The multis are there. Look, we've gone through the hoops, and grown with our experience, right? And we can just tell you in our experience, we've gone down that route with the multis, and I've circled back to the single family market quite happily. And I must tell you, it's going much better, and the customers are happier because their homes are tenanted and cash flowing. And most importantly here, people want to get their returns delivered, right? Nobody wants vacancy or incur expenses that weren't really foreseen, or issues with whatever, monkey business with the tenants, whatever it is. Those tend to happen more in the multifamilies for sure, right?
Yeah, so true. Didn't you talk with one of their references that said that they had pushed for a multi and they actually had regretted it?
Yeah, they're like, oh, the guys told us stay with singles, and we went more multi. And same with cash tenants versus Section 8. They all
look, cash tenants. Look, there's some homes where that maybe makes sense. Like, we occasionally, Voytek does some more higher end properties. When I mean higher end, we're looking at around maybe 150 to 200,000 in the neighborhoods, like Boston Edison or in Midtown, where you could be getting a professional, like a university professor or a lawyer who's renting. But first and foremost, the benefits of the Section 8 program when it comes to the assurance of rental payment, especially during these uncertain times, is tremendously valuable, right?
Yeah.
With the multis too. I mean, when people come, because every day people email me or call me and they say, "Oh, I want a 4-unit," and I'm saying, for the price of the 4-unit, we can put you in 2 single families. You're going to make more money and be happier. And because, look, I don't know about every market. There may be markets in Canada. I know you guys are in New Brunswick and as such, where it makes sense with the multis, right? It just, in our experience in Detroit, it's not that market.
No, most of Canada, I'd say multis make sense.
Yeah.
For the most part, there's some small places where singles may make sense, but property taxes are so high.
Right.
Yeah,
it's the taxes and ultimately the price of the house, right? Because we find once you get above like $250,000, even in the value of a house with the mortgage, you have to have high rents to support that and end up with any net positive cash flow.
Sure.
But in places like Detroit, when you can get a home for 150 or 100, your mortgage is so small. And if your rent is like $1,500 a month, you're still ending up, you can pay your mortgage, you can pay your taxes, you can pay everything, and you still get, let's say, $500 a month.
That's right.
Cash flow positive. So
That's right.
On a single home. So it really adds up, once you have more and stuff.
And especially when you convert that money to Canadian, right? Which is less now, but still, it's right. Canadian dollar strong, right? So it's good for you for buying, right?
Yes.
But that's one thing. It's like the total opposite of our usual strategy, because we always do multifamily and we do and we do a secondary market. So when François was talking about doing it in the States in single families, I'm like, what are you talking
Are you
about?
nuts? Have you been drinking too much? What's wrong with you?
You had too much of this.
There's a reason that some of these big funds, like in the States, really in the single family market, right? And look, Detroit is what it is, and these single family homes are definitely, I believe, in these neighborhoods is the way to go, and they are so scalable that we can just we can package them together in a portfolio for you, and we could just scale out that way, and it's going to be a better long-term experience and more lucrative for everybody.
Yeah, absolutely. So for the market in Detroit, do you find that is it becoming saturated? Is there still room to play in 2021? What are you guys kind of seeing?
No, it's funny because the prices have come up so much in the last 12 months that some of the bigger funds and some of these bigger portfolio holders that have 3,000, 4,000, 5,000 homes are selling off some properties. Okay. And so now it's being made available to other investors and rehabbers like us that you can buy 10 or 20 at a time and rehab all 20 at once and kind of do it. So we're seeing some of that, and people, obviously the prices came up so high that some people are just cashing out because they got these crazy deals like 5-6 years ago, and now they're like, okay, this is a huge upside, I'm going to cash out. So there is opportunity, and we've been picking up, like we've gotten more selective with the neighborhood. So like areas, people send me lists and I look at like 200 and I'm going to pick up one house, like maybe, so, and that's what we really do, is we really cherry pick, because it's almost like it's by block in Detroit. Like some people will see a street and they're like, oh, this is a great street, I saw a house. And I'm like, yeah, it's a great street on a 1600 block. But if you go down to the 15,000s, it's like little bit like Hiroshima, right? And so like you really have to know, your areas, and really be selective. So but I think there's opportunity to build a portfolio in the next 5 years, 100%. And I think like the biggest growth, the way it's accelerating right now, it's going to be in the next 5 years. So I think that that's why we continue to buy. I mean, look, we've been there for 5 years. We're not exiting. We're actually going in deeper because we can't find anything else in other areas that are as good. Plus, we have the teams there, so I think it's a great opportunity for anybody getting started. I tell people, like the number one tip I can give anybody listening to your show right now is that, get started, as soon as you can in real estate. It's whether it's with us or whether it's with somebody else, don't hesitate, and don't, you can study, you can get information, you can get your courses, you can get your seminars. All that stuff is important. Go to one of those. Take the weekend. Don't go to 100. Just go to one, because they cover all the stuff usually in one seminar in a weekend, that you need to know. And then just get started, because it's really life altering what can happen to you. And we feel so blessed to be in this industry. And I'm sure you guys are as well. And, and that, and many listeners here, if you're considering, investing, just do it now and do it quickly, and it will literally alter your life.
Yes, absolutely. I totally agree with you. So where can people find US properties? Maybe just tell them your handles and your email.
Yeah, I mean, absolutely. So first and foremost, we're USProperties.ca. We have a great website where we do keep our events updated on there. We continually have webinars on a monthly basis. And where we keep things nicely updated with some sample listings. I'm James at USProperties.ca. You can either email me directly and I'll get right back to you, or you can do a submission through our website. And Voytek, again, is Voytek at USProperties.ca. We keep it pretty simple.
Don't email me. I'm Steve.
I can tell you, if you do email Voytek, I'm just going to see a forward. It's going to be in my inbox, right? So
from the ski hill.
No, but look, I just want to echo, what Voytek was saying was really neat a minute ago about us being, he's been very selective recently with the property selection. We're busy in that the volume of people reaching out because of the virtual presence that we're starting to develop has increased. Mm-hmm. And we could have a lot of properties available, and it's amazing to me the amount of time and effort that goes into just selecting the right ones, right? And we're not flooding our inventory with stuff that is not going to produce good returns or be really solid. We're very meticulous in it, and I'm really, really pleased about where we're at with our development. And it'd be a pleasure to help anybody who's listening develop some passive residual income. And we'd love to work with you. So it's great.
Yeah, that's awesome. I think that it's such a good foundation to start off of, because when you pick the right property, everything else just kind of falls into place, and you don't have to worry about the rest as much.
It's a big part of it, right? If it's got the good bones to it, and it's going to be in the right neighborhood, and it's going to have the right renovation, and we can get the right rent, there's not a lot that can go wrong, right? No, and especially with our good property management and the job that our contractors do. And with me guiding you through the process, and Voytek captaining the ship, it's working well.
Yeah, that's great. That's awesome, guys.
Well, thank you so much for joining us this evening on Wine and Real Estate. We had a little bit of wine, a little bit of water, lots of conversations.
Thanks for having us, really appreciate it. Wishing everybody all the best, and cheers, Santé. So.
Thank you. Yes, my glass is empty.
Oh.
That's a good sign.
We're looking forward to seeing what US Properties is going to be doing, and I'm hoping that we're going to be involved.
Yes,
where you are, and it's been a pleasure to connect with you both, and we look forward to developing a very long-term business relationship. So thank you very much.
Yes, thank you.
Thank you. Take care.
Great night. Okay, thank you.
Bye-bye.
Bye.